So welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. So get this picture. You get audited, right? And then you say, my tax preparer did it. My CPA did it in your audit defense. All right, so let me tell y'all that stuff don't work. But I was reading my new EA journal. Yes, you got to read trade journals, right? This is how you stay smart on what's going on. But this is one of the most recent cases where people have tried to blame the CPA, the tax professional, everybody else but the taxpayer. All right. So, and right now, okay, as an aside, this is what's going on in the whole Manafort trial, because Paul Manafort tried to blame his accountant, right? And his accountant is like, nah, buddy, we in this together. So he just testified in court that, yeah, what I did for him was wrong. Yeah, we committed crimes together. And yeah, I stole money from him too. Dude, that is some drama going on over there. All right, but let's get back to the real world. So in this particular case, this was an attorney who got audited, all right? And he had a bookkeeper that was keeping his books, and he hired a CPA. Now, the bookkeeper was keeping his books based on checks that this dude wrote, not receipts or anything like that. But basically, this guy sent a check and said, yeah, this was for check 102 was for for a business meal. Check 103 was for travel. Okay. So there was no actual receipts or anything sent to the bookkeeper. And so then those bookkeeping records went to the CPA. Okay. So the CPA prepared his return based on the bookkeeping documents. All right. Well, dude got audited, and the IRS, I almost called him IRS like my husband does. So the IRS audited this attorney, and, they disallowed his expenses because he did not have any receipts. I keep telling y'all about these checks, right? So he didn't have any receipts. So the IRS disallowed his expenses. Now, so he got hit with a substantial underreporting penalty. And I want to read this to you because you guys got to get this, because the substantial underreporting penalty, that is like a smack in the face at 3 o'clock in the morning when you don't even see that coming. Okay. So, the Internal Revenue Code says that a 20% accuracy related penalty on an underpayment of federal income tax that is attributable to negligence, intentional disregard of rules and regulations, or substantial understatement of tax. Now, substantial understatement of tax happens when the understatement is more than 10% of the tax that's required, that's reported, or $5,000. So, if you say, okay, you owe $5,000 on your tax return, but you actually owe $6,000, well, that exceeds that 10%. 10% of $5,000 is $500, all right? So because it would exceed $5,500, then he would be, you would be liable for a substantial underreporting penalty, or if it's greater than $5,000. So, okay, so this attorney got hit with a substantial underpayment penalty because they disallowed his expenses. So then he went to court and said, okay, well, this penalty doesn't apply to me because my CPA allowed me to take these expenses. My tax preparer did it. I didn't do it. They did it. No. Right? And the funny thing is that he tried to hire the CPA to deal with his tax return. The CPA was like, bye, Felicia. Don't call me. I ain't got time. Okay. So he didn't even represent him in the audit. But here's the deal, you guys. And this is why I keep telling you about keeping this documentation. And also, as a tax professional, we prepare your tax returns based on the information you provide. If we ask you for information and you give us some stuff, that's all we can do. Now, I'm going to tell you, when it comes down to me, if I even think something sounds funny, I'm not doing it. But this man had a bookkeeper, and the bookkeeper sent the records to the CPA. So as a CPA, he's relying on the records that the bookkeeper provided. The bookkeeper's relying on the taxpayer. So the taxpayer ultimately did not provide the correct information, didn't have no receipts, didn't have any invoices. Okay? So, then you can't blame it on the CPA. You can't blame it on the bookkeeper. You can only blame that on yourself. And the courts, they eventually said to him, bye, Felicia. No, it's your fault. Because here's the deal. When it comes down to your tax return, number one, you sign under penalty of perjury that everything is true and correct. So you are saying that everything that you provided, that information that you provided, is true and correct. As far as deductibility, that's based on what the information that you provide the tax professional. If you give false and erroneous information, then you're going to have a false and erroneous return. And this is why I come here to teach you these things, that you can't just have your canceled check. If you have a canceled check, you better have an invoice that goes with it. It's not just a line item on your bank statement. It's not just a line item on your credit card statement. You got to have receipts to back up all of your expenses. And along with those receipts, you got to have documentation that says what you were doing. So if you are taking a business trip, that's all well and good, but you better have all of your receipts. I'm going to such and such conference because this is where, a lot of my customers are, or whatever, going to meet a customer. If it was an educational event or whatever, you need to have something that says why you went to that event. You need to have stuff like the program, who the event was for, all of that stuff to document, to show, to support that going on this trip really was a business trip. It wasn't just you on vacation trying to turn it into a business trip. Okay. I've talked about that before, but, you can't, my tax preparer did it is not a viable defense in an audit, because now, do you have shady tax preparers? Absolutely. You absolutely do. But you got to be able to prove that the tax preparer was shady and not that you did not provide the accurate information. And let me give an example. There was a married couple of tax professionals in Texas, I do believe, that just went to jail because they were filing false Schedule Cs. They were filing false business returns and showing them at a loss to increase the refund for the taxpayer. Okay. So that is the tax preparer did it, because if you as a taxpayer did not provide any information saying that you had a business and this is something that the tax preparer did, okay, then may not be criminally liable, but if you got a refund, you're going to have to pay that back because you were not entitled to get it to begin with. So this is why it's important for you to know what is in your tax return and understand what's in there, right? Because and I've had this, well, so-and-so said they can get me X amount back. Okay, if somebody promises you that they can get you a refund and they haven't looked at any of your documents, you need to run in the opposite direction at top speed, because that is, a false tax return waiting to happen, and we ain't got time. So, but notice that instead of this attorney taking responsibility for himself, he tried to drag the CPA in there and even said in court, wait, you guys, it says in here that the attorney said, well, the CPA had just passed his CPA exam. So you're going to try to throw the CPA under the bus saying, well, he did this, but he didn't know what he was doing because he just passed the CPA exam. Boy, sit down somewhere. That's some craziness. So the lesson to this is, listen, do what's right. Keep your documentation, you guys. Keep your receipts. And, and that's really what it boils down to. You got so many apps like QuickBooks Self-Employed. You can scan the receipt. You can separate it into personal and business. It tracks your miles and all of that stuff. It is so easy to do the right thing, but what is easy to do is also easy not to do. Okay. People talking about, well, the odds of getting audited are 1 in such and such. Well, that's all well and good until you that one. And he was this one and wound up in tax court. And they said, bye, Felicia, you getting this penalty along with the additional tax you owe us. Holla at your boy. All right. So yeah, keep your receipts, keep your tax returns. People are like, how long do I keep my tax returns? Till you die. Not, I know conventional wisdom says you keep, 7 to 10 years. No, you keep your stuff till you die. Why? Because there is no statute of limitations on fraud. And if you wind up in a situation where you are being accused of fraud, doesn't mean that you did anything wrong. It's just something that looks funky, but you have to be able to prove yourself innocent, because in the eyes of the tax court, you are guilty. Okay. So this is why I say keep your documents till you die. It is a small price to pay for not having to write a check to the IRS. Okay. That's all I'm saying with that. You can do what you do, but this is what I'm saying. All right. So that is it for today's episode, you guys. I hope this shed some light on, current events where, we still got folks trying to blame us. Dude, we can only prepare your return based on what you give us. And if you don't give us the right information, well, then your tax return ain't going to be right. But don't be trying to send Lysandra to jail because you jacked up. Not happening. All right. So listen, thank you guys so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish. And you can come here to get your questions answered about your home business taxes. All right. Have a great day. I'll see y'all next time. Bye.